Hi, if you are an investor in Kenya, there are mistakes that look simple, but really they might cost you years of investing. Today I'm going to share some of the mistakes. I'm going to speak about three of them so that you can avoid them to avoid learning the hard way. Welcome to Build Your Wealth. If you are new here, consider subscribing, and if you are a returning subscriber, thank you for stopping by. So, the first mistake that most beginners make is investing without a goal. Yeah, most of the people just say, I want to invest, but fail to ask themselves why. The question why is important. It's important to have a goal based investing because this is how you will know which asset to invest in. Yeah, I will explain. For example, if you know that my goal of investing is to be able to build a property in 10 years, while another person knows that my goal of investing is to be able to do a nice wedding in the next 6 months. These two people have different investment goals, and if you adopt goal-based investing, they will have to use different investment assets to invest. For instance, the person who wants to save to build a home in the next 10 years, you cannot use, for example, an asset like money market fund to invest because you have a long-term goal, yeah. But the person who has a short-term goal, like in the next 6 months, will not. You won't advise them to use like a bond, which is a 10-year long bond to invest. You see why we say that investing with a goal is necessary. So before you invest, you should ask yourself, why am I investing? Is it to build long-term wealth? Is it to buy a car? Is it for home improvement? And so on and so forth. Because the investment goal will determine the method of investment that you will use. Think of it like the short term, you can consider things like money market funds, and the long term, you can consider assets like stocks and maybe government bonds. So, the second mistake that most people make while investing is chasing hot stocks. Just because everyone is talking about a stock does not mean that you should invest in that company. Yeah, you will hear people saying that, for example, Safaricom is paying dividends, and a new investor without research and due diligence will invest in Safaricom. You will hear people saying that KCB market prices is going up, and people will run and purchase the shares without doing market research. If you do that, you find that after a while of holding the stocks, because the market is volatile, the prices of shares keep going up and down, and that is perfectly normal. And so, because you bought the shares because of hype, because you are chasing hot stocks, you will find that you will be tensing, and you can make the wrong decision and sell the shares just because maybe they have gone down a little bit, or just because the company has made a bit of losses. So that is why we say, before you invest in a company, you should do due diligence, you should do research. Ask yourself, is the company profitable? Is the company growing? And am I buying for long term? Am I buying for long term or for hype? If those three questions are answered, then you will know that you are buying a stock in the right company for the right reasons. Do not chase hot stocks just because everyone is hyping it. Do it because you have done your research and your due diligence, and you are convinced that even if the company makes losses, you are ready and in for it. And if it makes profit, good for you. The third and the last mistake that most beginners do, that I'm going to speak about today, is ignoring consistency. Wealth building is not an event. Wealth building is a lifestyle. So most people invest for the first few months and then they get tired, or they say maybe they don't have money. Remember, you do not need a lot of money to invest. Even with a few Kenyan shillings, or whichever the currency, you are able to invest, and the goal is to stay consistent. And the more you invest, the more you earn from the power of the compound interest. So consistency is important, because if you stay invested for a long time, that is how you will build wealth for a long time. For consistency, remember, even 1,000 shillings that is invested consistently beats a big amount of money that you want to invest that never comes. Because if you wait to have a lot of money for you to start investing, that time might never come. So for consistency, just start small, stay consistent, and what might help is automating your investments, such that the money that is meant to go for investment assets just gets into your account and goes directly to the investment assets. That way you will reap from the power of compounding interest, and consistency will come in your wealth building journey. So today, let's learn that investing is not about being rich already. It is about avoiding these simple mistakes and starting wisely. Thank you for watching up to this end. Let's engage in the comment section. Which mistakes do you think most people do, or which mistake did you do personally? And let us know in the comment section so that we can all learn from it. Consider subscribing if you are interested in weekly investment tips. Bye.